Welcome, welcome, welcome. Welcome to Fix It Finance. We have a good one for you today. We are discussing tax residency today. If you know, you know that you're a tax resident of Canada. Can I hear? I'm joking. Okay. Welcome to Fix It Finance. As usual, we go live on Saturdays at 12 p.m. Eastern. I'm learning to change some of these things, but yes. So welcome to Fix It Finance, where I help you take control of your money and build the life you want. Some fun facts about me. I'm learning to rebrand. Like I said, all you people that do all the social media things, more NGO, like you people are trying. You people are actually doing well. I hail all of you wherever you are out there. I'm learning. I'm joining you people day by day. Okay. I just need to. There we go. Okay, good. Alrighty. Let's get back into it. Some fun facts about me, like I try to share once in a while. As some of you may know, I started investing at 20, paid off my student loans at 23. I bought my first house at 24. Finished my MBA and CPA designations debt free at 30. And now I share as much as I can to help you do the same, no matter what your financial goals are. At Fix It Finance, we're just here to help you answer questions and shed light, because a lot of the things when it comes to financial matters can seem so daunting and so overwhelming and just unnecessarily just complex, So as much as possible, I try to simplify it for you. I answer your questions. So this is one of the reasons why I go live every Saturday. So if you have a question, put it in the comment section. I will be monitoring the comments and answering the questions as we go. If you've been following us the last couple of Saturdays, we've been doing a series on, registered accounts. So we discussed RRSPs, we discussed TFSAs, we discussed our ESPs. During tax season, we went through, a couple of tax boosters and how to get your tax return to be much better than, it might have been if you just did not know. So check out those videos and let's get right into today's video. So remember to like, share, and subscribe. Don't forget to hit the notification bell on YouTube if you're watching us on YouTube. Like I mentioned, I go live every Saturday at 12 p.m. Eastern. So bring your questions, bring your questions. Some of the topics we discuss, even if it's off topic, we can also take the question there. So let's get right into it. Today we're discussing residency for tax purposes. Now, this is important because I got a lot of questions this year, especially for some of the newer folks that came in. So some students that came in, say September, or started school, say January, or people, for example, that they have quote unquote jackpot, which is immigration in a different language. And they're here, but their spouse is back home, or their spouse comes here for half the year, their spouse goes back home, things like that. Like, what does that look like? Do they have to file their taxes? Do they not have to file taxes? Do they have to declare their income from here and everywhere else? Things like that. So that's one of the reasons I wanted to discuss this topic. And I had a speaking engagement at a church recently where I was talking on taxes, and I just realized, just based on that engagement, just how many people don't understand residency for tax purposes. So I was like, you know what? Why not bring it to the channel, shed some light, and then, go from there. So if you are here today, if you have any questions on this topic, don't forget to put it in the comment section and let's get right into it. Okay. So a lot of people don't know this. Well, if you know, it's more NGO to your armpits. But if you, just because you have a Canadian passport does not mean you are a resident of Canada, and vice versa. Just because you don't have a Canadian passport does not mean you are not a resident of Canada. So when it comes to taxes, residency is what is looked at. Okay, when it comes to the CRA, the tax code, they are looking at residence. That's what they are looking at. Okay, that's are you a resident of Canada or are you not? That's what they're looking at in terms of how they tax you. Okay. So like I mentioned, just because you have a passport doesn't mean you are a resident, and just because you don't have a passport does not mean you are not a resident. So for tax purposes, they look at either resident or non-resident, not citizen or not citizen, okay, or non-citizen rather. So as the name implies, it's your residential ties to Canada, the residential ties you maintain in Canada that determine if you're a resident or not. Okay. So residential ties are grouped into two groups. They are grouped into primary and secondary ties. So what they mean by tie is, for lack of a better, not lack of a better word, but like another word to describe tie would be connection. What's connecting you to Canada, right? That's what they're looking at to assess if you need to pay taxes or not. Okay. So you can try and sever as much as of the connections you have to Canada. So a lot of people want to eat their cake and have it too, in the sense of they don't want to live here and pay all the bills here, but they still want to enjoy things like the healthcare and whatnot and keep their license and stuff like that. So those are some of the things they look at when they're determining your residency. So like I mentioned, residential ties, they are grouped into two. There's primary residential ties and secondary residential ties. So for primary residential ties, there are three main things. The first thing is, do you have a home in Canada? Okay, do you own a property here? So do you maintain a home here? So for example, whether you live in the home or not, do you have a home in your name in Canada? So that's one residential tie. Okay, it's residential. If you have a residence here, that's definitely a tie or a connection to Canada. Okay. The other thing they look at, which is also very important, is do you have a spouse or common law partner that lives in Canada? Okay. So let's say you don't even own a home here, but your spouse lives here, right? You are connected to Canada, whether you like it or not. Okay. So, like I mentioned, they look at residential ties. Another word for residency, because just sometimes when people hear residency, it can be confusing, especially with immigration terms and whatnot. Just think of connection. When it comes to taxes, they're looking at your connection to Canada. That's just an easier way to think about it. What are your connections to Canada? So, if you have your primary connections, if you have a home here, if you have a spouse or common law partner that lives here, and if you have dependents that live here, so children, okay, children, any sort of dependent that lives here, okay, those are the primary connections they look for. So if you have any of those three, chances are you are a resident of Canada for tax purposes, and you in fact need to, or you may need to file your taxes, and depending on if we'll go into tax treaties and all that if we have some time later on today. Okay, so those are the primary ties. Like I mentioned, one is having a home in Canada, having a spouse in Canada, or having dependents in Canada. Okay, those are primary ties. If you have any of those three, one or more, chances are you will be considered a resident for tax purposes. Okay, so even if you're not physically present in Canada, if you have any of those three, those are connections to Canada. Okay, so like I mentioned, residency, another word for residency that I like to use to explain when I explain to people is connection. What are your connections to Canada? Okay, the secondary ties include if you have personal property in Canada. So the primary tie was a home. In the secondary section, what they're looking at is personal property, things like you still have furniture here, you still have clothing here, you still have tools, that you use for business and whatnot here. You understand? So they're looking at things like that in terms of your connection or your tie to Canada. Second thing they look at in the secondary section, secondary, hilarious. Social ties to Canada. So for example, you have a gym membership you still maintain in Canada, or you are part of a religious organization here where you have a membership. You have membership to different things. Whatever sort of membership you have, be it to, like I mentioned, your gym, your social, whatever, your golf membership, all those kind of things, they definitely look at that. The other thing they look at is economic ties. So if you have a Canadian employer, right? So even if you're living in, say, Nigeria, but your employer is Canadian, you could be considered resident for tax purposes. Okay. If you have involvement in any Canadian business, you're a shareholder in your sister's business that is based in Canada, you understand? Things like that, you definitely want to pay attention to because you could be considered resident for tax purposes. Um, you maintain a Canadian bank account. So these are all part of economic ties. Okay. So you have a Canadian employer, you run a Canadian business, or you're involved in a Canadian business. You have a Canadian bank account, Canadian credit card, Canadian retirement account, Canadian investment account. You have a TFSA, RSP, all those things. You could be considered resident for tax purposes, even if you're not physically present here. If you maintain a Canadian driver's license with any province or territory, those are secondary ties that they would look at to determine if you are a resident for tax purposes. If you have landed immigrant papers, so a work permit, a study permit, or the like, and you are physically present here, chances are you will be considered resident for tax purposes. Um, if you have a seasonal dwelling or a leased dwelling place, so for example, you may not own the property, but you rent a property here in Canada, or you come here, you rent, a particular cabin for 6 months out of the year. You understand? Um, you have a Canadian passport. That's also one thing they would look at. So there's some people that have Canadian passports, they're not physically here. You could be considered resident for tax purposes. Again, depending on the situation. So when it comes to the primary ties, those ones for sure, if you have any of those three, there's a high chance you could be considered a factual resident. Okay. If you don't have any of those three, but you have some of these secondary ties, again, it's not one factor they look at. For example, if you have a passport, that doesn't automatically mean you're a resident for tax purposes. They would look at several factors. Another secondary type they look at is if you have a health insurance, if you still have health coverage through any province or territory. That's another thing they look at. So you still maintain your health coverage. And you see that a lot in people, for example, let's say wife gets a job in the States, you understand, or husband and wife both get jobs in the States, but because of the free healthcare in Canada, they still want to maintain their provincial health coverage. You understand? So those are some of the things they look at to determine your residency for tax purposes. Okay. So again, just mentioned they look at a lot of these things. They don't just look at one. Okay. So some other factors that the CRA may look at to determine your residency include maintaining a Canadian mailing address. So even if you're not physically here, you maintain a PO box, a safety deposit box, a mailing, address here in Canada. You still have your Canadian cell phone listed. You have like a Canadian newspaper or magazine subscription. So anything that connects you to Canada basically is what they're looking at, and they're going to look at several factors. Okay, because of course, if you're going to enjoy the benefits of Canada, they want to make sure you are paying into those benefits. Okay. And like I mentioned, anything that could tie you to Canada or connect you to Canada, those are all the things they look at to determine your residency. Okay, so a lot of times when we discuss residency, there are two words that come out a lot: is factual residency or deemed residency. So factual residency basically is talking about, so now what we're looking at are, okay, so the people that actually live here. So once you spend over 183 days in Canada, right, so which is roughly 6 months and above, right, you could potentially be determined to be a resident for tax purposes. Okay, especially because that's physical presence, you're physically here. Okay, so let's leave that for now. Let's assume everybody that's physically here, right, like, and has spent over 183 days is resident for tax purposes. Okay, again, an assumption. Now let's look at the people. For example, you have a situation whereby husband and wife, they live in, say, Windsor, Ontario. They both work in Detroit, literally a stone's throw from Windsor, Ontario. In that situation, they still maintain a home here. Their children live here in Canada, but they work in the States. So what would they be considered resident for tax purposes in Canada or the US? Okay. So a factual resident, just for definition, if you're a factual resident for income tax purposes, if you keep significant ties like we talked about in Canada, even if you're living or traveling outside the country. So you know how when the whole capital gains tax situation happened and everybody was shouting, I'm leaving Canada, I'm going, I'm not staying again, I'm done. You understand? For those of you that have made that decision, make sure you speak with a tax accountant or a tax attorney to determine what the repercussions are if you leave Canada. Because part of it is, if you leave Canada, for example, and you decide you're leaving Canada, whether or not you sell it, sometimes you may actually be considered to have sold everything you have in Canada, and you may have a huge tax bill to pay. Okay. And then just because you left does not mean you stop being a resident for tax purposes. Okay. Just because you left physically. So the term factual resident basically means that although you've left Canada, you are still considered to be a resident of Canada for income tax purposes. Okay, that's what a factual resident is. So they've looked at all the facts and they're saying, okay, all sentiments aside, you are still a Canadian resident for tax purposes. So examples include, you're an expatriate working abroad, but your spouse and your children live here in Canada, even though you're working in Malaysia and whatnot, you would likely be considered a resident for tax purposes. Okay. If you're a consular worker, so all the Canadians that work in like the consulate, say in Nigeria, in Jamaica, wherever, um, they are still considered to a large extent, depending on again all the factors in place, they might be considered resident for tax purposes, like a factual resident. Just because you're working in a different country, your employer is Canadian, you maintain Canadian investment accounts and retirement accounts and whatnot. You have family and dependents here. So chances are you will be a resident for tax purposes. Um, you're a student, you're leaving Canada to study abroad. Let's say you got a hockey scholarship to the States, right? But your family and everybody else is based here. You're only going to the States for school. You maintain your Canadian health card, you are tapping into your Canadian RESP, stuff like that, you are chances are you might be resident for tax purposes. Okay. You're a commuter. So, like I mentioned in the example, husband and wife and children live in Windsor, but husband and wife both work in Detroit. So they cross the bridge every day and come back, things like that. You're a commuter, so you will still be considered resident for tax purposes in Canada. Okay. You're a snowbird, for example. You have a lot of people that live half the year. For example, I know people that they come to Canada, they work for 6 months during tax season, they're accountants, they do the tax season, and then when they're done, they pick up their bags and they go back to a different country that they're also a citizen of. So, or a snowbird, for example, those that are in retirement, they go stay in Arizona during winter and come back. They maintain their their provincial health card and stuff like that. So in that situation, chances are you might be considered resident for tax purposes. Okay. So what are the tax implications if you are a factual resident for tax purposes? You have to declare your worldwide income from all sources. So you will file a tax return just like every other person that's physically present in Canada that's considered a tax resident. You can claim all your credits and deductions, CCB, GST credit, the climate action incentive plan, which I know they've renamed this year, refundable credits, non-refundable credits, all that. You'll be treated basically like you're part of, those that are in here physically and are considered resident. Okay. So the second word that gets thrown around a lot when it comes to residency is deemed resident. Okay. So CRA has determined in the first factual residency, they've looked at the facts. There's no question you are a Canadian resident for tax purposes. So in a deemed resident example, what happens is people who are not factual residents, so all the facts don't necessarily point to the fact that you're a resident, but you have enough ties to Canada that the CRA decides to make it official. Okay, so you know how I mentioned there are primary ties, which is you have a home, you have a spouse, or you have spouse or common law partner. So when I say spouse, I include common law as well. So you have a home, you have a spouse, you have um children or dependents here in Canada. Chances are you are, so in that situation, no question. So there's the secondary side of things where we talked about maintaining a health card, maintaining a driver's license, having a passport, having a Canadian bank account, having economic ties and a Canadian employer and all that. Those are some of the things they look at, such that, although you thought you were not you were not resident for tax purposes, but because of all these facts, the CRA is like, yes, you are, ma'am or sir. Okay. So there are two categories usually in this deemed residency part. There's Canadians that are working abroad, okay, in an official role. So like I mentioned, I didn't mention this. So people like military, you know, you're Canadian, but you're serving in Namibia somewhere, for whatever parole the Canadian government has there. Okay, so you're military, you're a government employee. Think of your ambassadors, your consular workers, and all that live in other countries, and their family members. So the entire family might be living somewhere else, but the fact is, you could potentially be deemed resident for Canadian tax purposes. Okay. The other side is people who are not factual residents but have spent 183 days or more of the year in Canada. So you, although are not factual residents in the sense of we've looked at all the facts, you don't necessarily have all the things pointing to you, but you've been here for over 6 months. You've been physically present for over 6 months. Now, a caveat, understand just because you've been here for over 6 months does not automatically mean you are a resident for tax purposes. So there are a whole bunch of factors they look at. So for example, you have your parents or grandparent or whatnot that comes here to help you, say, take care of your children, right? On a temporary resident visa, right? chances are they may not be considered resident for tax purposes. Again, because all the factors do not necessarily point in that direction. But the moment they start doing things like opening a bank account, having a credit card, having a Canadian employer, having a Canadian mailing address, having what else? Uh gym membership, organization membership, having buying a house, even though they are temporary residents and whatnot, then you can start to, blur the lines a bit, and the CRA could determine that okay, this person is a deemed resident for tax purposes. Okay, so you always want to understand and know some of these factors so that you don't get yourself into trouble, especially for those that have family members coming or those that are planning on leaving the country for a time and back. There's some people, for example, you work remotely. You might decide, okay, I have a 100% remote job. I want to go and live in Costa Rica. I want to go live in Jamaica. I want to go live in Nigeria and be working my remote job. So before you make those decisions, make sure you understand what the implications are. Just because you left physically does not mean you've left taxfully. Okay. Okay. Um, so the tax implications if you're a deemed resident is, you must report your worldwide income, right? And they would want to definitely look into all that. You can claim deductions that apply to you. You may be subject to a federal surtax. So, for example, in the case of, say, a government worker that their entire family lives abroad, they don't necessarily have a provincial health card or a province to pay tax to. So they may not be subject to provincial taxes. They may have a federal surtax, because provincial taxes don't apply. Okay. Excuse me. So that's where you have to be careful, especially for those, for example, who say they've jackpot or they've immigrated. You understand, the wife and children are here, they've bought a house here, the husband or the wife also has PR, but one of the spouse always goes back home or goes to a different country to work. You definitely want to look into such things so you don't get yourself into trouble. Okay. um, so I mentioned if we had time, which we do, thank God, we'll discuss tax treaties and what they imply. So it's very possible that you might be a resident for tax purposes in more than one country. Okay, so the example I gave of husband and wife that say live in Windsor, their house is here in Canada in Windsor, their children go to school in Windsor, but they both work in Detroit, right? Which is a stone's throw from Windsor. Literally, you will be in Windsor, you'll be looking at Detroit right there. You can throw, you understand? So, assuming, let's use that as an example, so in that case, they both work for US employers, but they are Canadian residents for tax purposes. So in that case, what happens is, so that's the example. So for example, they are working in the US, but the family and co live in Canada. So in that particular situation, Canada and the US, they have a tax treaty, right? So that basically that tax treaty is what is going to determine who gets the tax money or how the tax money is split. Okay. So tax treaties usually kick in and they will be the tiebreaker as to who and where you pay your tax. So in the case of, let's say, your spouse works in the States, you understand, but you, the other spouse, and the children are here, it's the tax treaty that's going to determine who gets the tax. Okay. In terms of whether it's the US or Canada. Now, Canada does not have tax treaties with everybody. So you're going to have to know the specifics of whatever country you're dealing with. You understand? So, like I mentioned, if you're someone who you work in Namibia, your family is here, you're gonna have to understand what sort of tax treaties Canada has with Namibia, if it exists. If it doesn't, then you and the CRA will have to have some discussions. So don't be afraid to have those discussions. The CRA, they are human beings, okay? Last, they are people too. So pick up the phone, call them, talk to them, ask questions, and make sure you know what you're doing before you make some of those strategic family decisions, okay? So that you don't get yourself into unnecessary stress and have a huge tax bill at the end of the day. Okay. And remember, you usually have to declare your worldwide income. Okay. So here, just to summarize, it's important to, like I mentioned, to do your homework before you decide to leave Canada or before you decide to move to Canada. So understand residency for tax purposes. Okay. That brings us to the end of today's discussion or today's topic. If you have any questions, please put it in the comment section. If you don't, I think I'm gonna, if I don't see any questions, I think I'm gonna wrap it up here. So thank you so much to everyone that has joined us today. If you notice, was trying to stream on multiple platforms. I'm learning. This social media thing sometimes. But yes, we streamed on Facebook, Instagram, and YouTube today, which is quite cool actually. So yes, Thank you so much for joining us. And we'll see you next week. Again, we go live every Saturday at 12 p.m. Eastern. Um, Thank you for joining us today and see you next week. Have a wonderful weekend. Bye, guys.